Bringing you a stand-up act. Bill Lau, partner at SOSV Ireland, will bring his special brand of comedy to this stage. It's going to be great. Don't miss it. That is today at 4:20. It's time now to discover Web3 through this panel, which seeks to answer the question, what does it take to scale the world's biggest Web3 to IPO? Our panelists for this session are Yat Siu, founder and chairman of Animoca Brands. Yat founded one of the world's largest apps for developers and publishers, valued at $5.9 billion. Robby Young is CEO of Animoca Brands. He's a blockchain game maker and a crypto investor with brands including Blowfish, The Sandbox, Eden Games, Enway, Motorverse, and more. And this session will be moderated by Nick Watson, founder and chair of the Encrypted podcast. Welcome.
Good afternoon, everyone. Thank you for joining us. We have a packed house, I can see here. We have Yat from Animoca and Robby. So look, before we get into the whole session, I'm going to let the guys just give a quick brief of what they're up to, where they are today, and where they're going to be in the next couple of years, I think. And then we're going to get straight into the Web3 to IPO component. Thanks, gentlemen, for joining us.
Well, thank you. So my name is Yat, as mentioned, chairman, co-founder of Animoca Brands. Since we both are with Animoca, I think there's no need to repeat the story here. But basically, in a nutshell, we're ecosystem builders. We're obviously very heavily involved in the gaming and GameFi sector. We have over 540 portfolio investments. And in some ways, we kind of look ourselves essentially as a way to sort of advance digital property rights. That's actually our mission. Worldwide, as a business, close to 1,300 people worldwide. Brands that you have maybe interacted in Web3, whether it's OpenSea, Magic Eden, Axie Infinity, Sandbox, even things like Off the Grid, right? Basically Gunzilla, these are all part of the Animoca ecosystem.
Robby?
As Yat said, we're very active supporters of the ecosystem. I spend a lot of my time on our investing activity. We do have a very large, I think we're probably the most active investor across the Web3 space. Particularly, I guess you could say, focused on being broad investors, both on the infrastructure side as well as the content side. And so we spend a lot of time trying to support our portfolio companies and facilitate network effects amongst them to help build the ecosystem.
Okay, so look, before we go into the IPO side, let's just set up some context here. You're mentioning infrastructure and then obviously content development. So can you just break down what the future is for the next 1 to 3 years on the infrastructure / then the content side of things?
Well, I mean, I think one of the reasons why we invest so heavily in L1, L2s and general infrastructure is because we still need to basically build out much of the infrastructure that can support Web3. You know, it's not just about transaction speeds, it's also about liquidity provisioning, about safety, security. One big area, for instance, that we're spending a lot of time is essentially on digital reputation, right? Actually, that's really important. When you think about identity, how do I interact with someone on the other side that I can trust? And again, reputation frameworks, which is what we're doing with Mocaverse, becomes really, really important. But I would also say that the end goal is really about culture and entertainment, because we think of Web3 really just as the better internet. And what is it that we do in the internet every day? Where do we hang out, right? I mean, we're not configuring DNS configurations, or we're not basically sort of doing SMTP stuff. What we're doing is we're basically interacting with friends. We're playing games. We're watching videos. We're engaging in cultural and social things. And that's ultimately what we'll be doing in Web3 as well. And so the reason we focus so heavily on gaming initially was that we think that's the most natural flywheel, the most natural way in which we are already engaged digitally, which a lot of people describe as the, let's call it, early version of the metaverse. And that's actually what's important. At the end, we don't believe that users are going to be caring about which chain they use. They just care about the value the application delivers on the front end, and everything happens in the back. And the parallel example, I think of it, is a little bit like ISPs, right? Like, in some ways, L1, L2s are protocols, but they're also more similar like an ISP, I think, right? And back in the days, you remember like AOL or AT&T, or these guys are building essentially infrastructure. People used to say that, oh, they have the last mile, so aren't they the most valuable thing? It turned out, actually, it was Google, and it was, Microsoft, and all these companies that provide actually applications that matter. That doesn't mean those infrastructure wasn't critical. Without them, the internet wouldn't work, but they weren't the one thing that people cared about as much. It just had to work, right? They were like the plumbing.
So if Web3 was not a term, what sector would you be in?
If Web3 wasn't a term,
it didn't exist. Nobody invented it in 20 years.
Yeah. So I mean, I think the way that what really attracted us to Web3 wasn't obviously the term Web3. It was what blockchain could do. And what blockchain does is it gives us a way to actually have digital ownership. That's the key aspect about blockchain. So I would say we would have tried to be involved in any space that will empower the user. And blockchain to us is, from a digital context, perhaps the most empowering way for any user. That's it.
Well, because if you think about what gamers have always done, they're the first audience who are kind of digitally native, where they use digital assets, digital currency, and they spend it to buy virtual stuff. They buy things in games. And so this audience naturally has a facility with buying virtual stuff. You don't have to explain to them the value of virtual goods. But the problem in Web 2 was we kind of had a false promise with customers because we weren't actually giving them ownership of the stuff. They couldn't do what they like with it. There were lots of limitations. You can't sell it, you can't trade it with your friends. And so Web3 starts to finally deliver on some of that promise where we can give them that true digital ownership.
I think there's also another thing about ownership which I think is much more valuable even than just the purely financial aspect, and that goes back down to the point about your legacy and your reputation. So it's the same way that some people don't want to sell their family home, or people don't want to sell their family heirlooms, or they want to show that they actually really did something that they achieved. Whether this is a medal or something like that. So for instance, in the gaming world, there's no way that I could compete against the kids of today, right? I mean, I was a very active gamer 30 years ago, but okay, that was a long time ago. Today, I would completely get sort of basically wiped out. But if I could prove that I was actually a really active gamer and had achieved certain things beyond any kind of fame because of the assets I earned, then I would get kudos for that, and I would also have a different kind of credit when I'm joining this thing. And that's basically how it works in real life, right? If you studied in university and you have a certain achievement, you get credit for that even 30 years after the fact with other maybe alumni of that same university, right? Because there's again a belonging that comes in because that's something you really own, that's yours, right? And that's basically, I think, one of the most powerful things that connect us as humans.
So let's talk about why IPO. Before we get to that question, the legal structure of the holding is where?
We're an Australian public company, but unlisted. And there's a funny sort of backdrop to this. In some ways, I argue that the reason why Animoca Brands is I can actually preach literally decentralization in DAOs is because we are actually quite decentralized ourselves. Meaning we don't have any single shareholder that has more than 10% of the company. We have 2,800 shareholders, and we only have one class of stock, which is common. So basically...
So no preference or anything?
No preference, nothing. So we are literally like a DAO, and every time we have to make major decisions, we have to go through a shareholder vote, which is the issue, because it takes us almost 2 months to do that, because you have to...
So that must suck every single time.
Yeah, because we have to do a
board
prospectus
resolution
and that kind of stuff. But that basically means that we're quite familiar with, I guess, running these types of governance, because as a public company, we have to publish our financials, we have to do reporting, because we have 2,800 plus shareholders.
I thought it was complicated to get. My board represents 84% of my company,
right.
So we can vote and get approval instantly. But this must be difficult.
Yes, democracy is very messy.
Yeah,
but powerful in another way, right? Because in the early days when Animoca Brands really sort of started to accelerate in 2020, 21, actually our shareholder base was a key engine of driving awareness. They were our community, right? They all had a stake, and what was really powerful was that, we as Animoca Brands created generational wealth for basically people who didn't come from wealth by having shares in us. Because when we were a listed company in Australia, in 2017, when we basically really pivoted deeply into NFTs and blockchain, I think our market cap was less than $10 million, right? And so as a result, we've been sort of driving generational wealth for a lot of that community. That community, of course, has become our biggest champions. So that's kind of part of that as well. And you kind of see the similar thing in token economies. And you see this with NFT communities, the same thing. Your biggest fans basically are developed that way.
So what is the makeup of your shareholders? Obviously, you've got a very long cap table in a private entity. So this is obviously very different than having a public platform. How many are institutional and how many are, let's say, non-institutional?
So I would say because of the legacy of having previously been publicly traded, we had a lot of retail shareholders as well. So there's a large component by number of retail shareholders, and then we have, I don't know, dozens of institutions, and as Yat said, nobody over 10%, so it's fairly widely distributed. But I think one of the other things, and I think Yat gets credit for sort of this vision, is as we raised capital, particularly in the very frothy 2021-22 period, we would open investment rounds and bring in as many shareholders as possible. Rather than just saying we want to raise an amount of capital and one person writes a check, we actually wanted to have it as widely distributed as possible because it gives more partners a stake in the future of our outcome and our business.
See, is that a byproduct of the fact that your brand just went from here to here and you could have that choice of having as many as you want? Or, because most people are like, I'll take 200 million and just take it in one check.
Yeah, no. So, I mean, of course, the times were different, but in 21 and 22, we had to turn away capital. So that was
the good old days.
Yeah, those were. But I think it's also important to be. So what we did was, rather than turn away capital, we tried to distribute it amongst multiple stakeholders, so they had a stake in it, so that they actually would then be able to sort of become interested in what we do. Because when you think about it, it doesn't matter if you're a public company, whether you run a token, whether you run an NFT project, the most important thing is to maintain intention with the group of people that matter. And one of the things that happens is that when they're not invested in you, then you lose attention. Simple as that, right? And I think this is something that we learned when we were running a public company in Australia, right? Because when you're running a public company, it's very different than running a private company, right? And when you're running a token, you're kind of running a public company. And that's, I think, the difficulty in the traditional world. The founder that built a company to get IPO ready might not actually be the right person to take it IPO, right? So you see people, he's no longer the CEO of the business, he becomes an advisor. The person who runs the public company is maybe an executive who has experience managing a public market. In tokens, they're all connected to the same person, right? So I think that experience helped us. Being just a small Australian public company, that experience drove that. It is true that, of course, if there's demand, that's a high-class problem to have. But even if you don't have demand, actually, if you can help distribute it, like I remember in the early days, people used to say, we don't want that many angel investors because it gets messy to handle at the cap table. But actually, that means that you also have less of a network to leverage from. Yes. And I think in the old days of VC investing, where it was mostly about zero-sum outcomes, you wanted to align with the one party because it was very adversarial. And basically, capital could win the game, literally through brute force. But in Web3, that's not really possible anymore. And so more alliances, I think, is a better strategy.
Yeah. So most people who go from being a non-IPO company to an IPO company, they have the dreamy hat on, right? Technically, the panel title is wrong. You're a Web 2 to IPO, IPO to Web 3, Web 3 to IPO, right? So you're like you've done it all already. You've been through the pain, and you've had to, and you still are looking at doing it again. So there's obviously something you enjoy about the pain, right? It's like scratching an itch. You've got to keep doing it. It's your fault.
Yeah.
Okay. All right. Explain.
Well, I think it can. The more you learn about it, the less painful it becomes. And I think one of the reasons, like as Yat said, there are all these reasons for bringing on a larger cap table and lots of investors because you have more people with a stake in the business. But at the same time, we actually had an advantage, which was having been publicly traded, we had that one class of shares. And most private companies struggle to have that diversification because it means you have 10 different people to negotiate preference share term sheets with, and all of those different rights, and everybody argues, and there's lots of like gamesmanship and things like that. Whereas in our case, with one class of shares, you just sign a bought and sold note, That's it, right? You either pay the price or you don't. So it's very, the documentation is very straightforward and the ask is very straightforward. So actually the admin was a lot less. But if you had to go and negotiate individually with lots of people, that's why in the traditional form, it actually works better when you have a lead who sets all the terms and everybody else has to follow.
Now, our story as being a small public company in Australia, if it weren't that, we probably wouldn't have come to where we are today. So there's a stage sort of in life for everything, right? We weren't just public because of an accident. We were a small company, that's true. However, remember 2017, 2018, particularly 2018, crypto was in the doldrums, right? Bitcoin below 3,000, Ethereum hit $90, right? Everyone was running away from crypto, like really, really badly, right? And so, if you're out there talking to an institutional investor in 2018 about, hey, we've got this thing doing NFTs, which is a kind of token that is even less, that is less fungible, trades less, and is a kind of this new idea, forget it. Nobody was investing. However, the retail Australian investor was willing to take a bet on that, right? So it depends on the cycles, right? So that was that purpose. But now, the reason we want to go public is because the market's ready for that. The reason we had to leave the public market is because actually the regulatory framework for crypto was hostile. And so it was difficult to be...
Has it changed?
It has changed in some markets, and that's something that we didn't know back then, right? So now going public in the right market, one that's supportive, it actually will help grow that space. And we take a lot of inspiration from companies like Coinbase, which have proven that if you are even in a hostile regulatory framework, you can be a very successful company. And what you do, it's not specifically just a share price. It's actually that they've become a kind of proxy for a digital, for sort of a digital asset space that really is scarce. Like if you don't want to buy a token, you don't want to buy in a project directly, and you want more diversified impact, you want to try to buy a public company that has exposure to the space in a significant way, really which company can you look at? And so in that sense, we think that we could play a similar role as being that company, but for Asia. And also, we're not an exchange, right? So it's also different. I expect many exchanges to eventually go public, just like Coinbase. But which are the ones doing it around gaming and culture? That's something that only we're doing at the moment at that scale. And so I think, again, we could potentially be that business. And there is a premium for companies that do it first. And again, this is how we will onboard more people into Web3. So that's kind of part of that.
Well, and if you think about the early days of the web, back in the mid-90s when people were thinking about companies going public, the first generation were all basically search engines, because that was the idea, that was what was considered the web. And then e-commerce followed and other things, but it took a while. But most people's exposure to the internet was just search engine, from an investment standpoint, was just search engines for the first 5 years.
And we've entered an institutional era of crypto now. So, maybe a few years ago, that narrative didn't exist. But actually now, thanks to Bitcoin ETFs, the institutions have come in. And so the first wave is, okay, let me buy some Bitcoin. I don't want to hold a token, but I'll go buy an ETF. And so then the next wave comes into, okay, so that's interesting. It's done well for me. Where do I go next? And they're not going to go and buy a token directly. They might buy some other ETF products, but eventually they're going to start looking for companies in the space. And this is kind of also what you see with tokens. The tokens that are doing well today, even though the market's increased, many of the other tokens, let's say like meme coins, have not really done that well, right? And the reason why, some of them have done okay, but really only a small percentage benefited because they don't have institutional backing, right? It's all retail, right? But Bitcoin, Ethereum, Solana, Ton, even our own Mocha, they have all basically institutional backing. And so they've held up quite well and done better and outperformed the market, which is kind of how, the US stock market is 80% institutional. Yeah. But in crypto, it's 95% retail, right? So there's still a long way to go before the institutions come in. So I think it's all about the right time, and we think the right time is soon.
Look, it's quite impressive. Like we're sort of like older generation, so we've built stuff multiple times. But you've gone and done the hard work. You built a company that went public, delisted, is looking at going public again, has completely pivoted in certain cases. Your governance structure inside the organization has matured a lot over the last, let's say 8 years, right? So you become institutionalized, even though you're sort of in a sector that is considered the Wild West. let's just be in general. I'm not making a statement about anybody specifically. And you are like the mature guys in the room when it comes to Web3 governance structures, having to report, etc. Because you've obviously been through this cycle. So surely when you guys do eventually go to IPO, 1 year, 2 year, whatever the time frame is, which you can discuss, you guys are primed for winning those institutional backers, I imagine. I'm sure you got a few banks chasing you.
Yeah,
right
I mean
now.
that's part of it, but also, you know, I know that there's a lot of narrative in our space around, oh, you know, anti-institution, that kind of stuff. But then actually, who do we trust? We trust Coinbase. What is Coinbase? We trust Circle, right? They're about as institutional as it gets, right? And I think this is the thing, you know, it's the same thing about sort of when you talk about decentralization. That's important. However, when you lose your Bitcoin, when someone steals your NFTs, what do? You go to the police, right? And you ask for help from an institution to support you, right? So I think the point is, who are the institutions that can support you in that? Who are the ones that have the credibility to do that? And that's kind of the role that we'd like to play. And by the way, we think many companies will be there, and there'll always be a space for everyone else. Clearly, that's the whole point, because it's a more democratic way to access it. But you need both, is the point, right? I think I would argue that the stock market has become way too institutionalized, and therefore it's not really become democratic for other people. It's not a fair game. But likewise, I would say you need the institutional support coming into the Web3 space. I mean, if Bitcoin ETFs didn't come in, we would not be where we are today.
For sure.
So what's the timeline for the IPO, all right? You've created a bit of FOMO right now, so let's tap into that. So potential timeline, and obviously there's rumors about where the listing might be. And also, if I'm just going to dig a little bit further, which normal world bankers are you talking to?
Yeah, so we can't talk about which normal working bankers. But I would say, because these are all confidential conversations, but what I can say is that this process does take a few years' time. There's a couple things we're completing that's already fairly public. As you can go to our website and get our financials, but basically the audit is going to be completed. And on completion of the audit, that basically triggers that next step. So, which we hope to basically have all done by this year, right? So those are kind of some of the next steps that are going there. And you know, we're a Hong Kong-based company, and but also we do a lot in the Middle East. So we like both of these regions from our perspective, and maybe Robby has some thoughts. You know, we think these are prime candidates for us as markets.
For sure, because if you look at the regulatory environment, this year has been particularly a watershed year for digital asset companies. And so we see a lot of kind of outreach from government regulators, both here in the Middle East and in Asia particularly, where they're much more welcoming of new trends and new innovations in digital assets. I think actually on the flip side, I look at the US, you know, a place where I grew up actually, with a little bit of sadness, because I feel like they're missing the boat because the regulatory environment is not the friend of domestic industry. And so I think for the Web3 companies in the US, they've struggled more because of regulatory uncertainty. So for us, of course, we feel like, you know, we have a natural advantage being headquartered in Asia.
So we've run out of time, but let's talk about the next 6 months just quickly. What are you up to in the next 6 months? And are there any cool announcements coming out in the next 6 months?
Well, we have some pretty big announcements end of this week, which we can't discuss.
This week we're in right now?
Hold on, is it it's supposed to be? Yeah, I think it's end of this week.
So
yes.
Don't worry, just advance the week. We're here already.
Yeah,
Let's talk
so
about
exactly.
it.
So pay attention towards the end of the week, or maybe early next week, right? And I would say the one main thing that we're really sort of focusing on is trying to build more trust and therefore more reputation in Web3. We think that's the driver. That's how we deal with all these Sybil attacks, right? And that's how we create a better, healthier ecosystem. Because Animoca Brands is very much indexed to the entire Web3 space because of our investment size, because of our exposure. And so it is sort of incumbent on us to make sure that the entire Web3 space becomes bigger and better, not only to the benefit of us and our shareholders, but for the entire ecosystem.
Definitely.
Robby, come on.
So I think, you know, there's obviously lots of trends. As many know, we're big supporters of the Telegram TON ecosystem. And so we have a lot of products there, and we're still the biggest maker of games in the TON ecosystem. And so I think with our roots in consumer, we're always looking at vectors of adoption from a consumer perspective, which is why we still have one foot firmly planted in the gaming and entertainment industry. Because as we think about bringing on board, the next generation of users in Web3, consumer and mobile are both extremely important platforms.
Look, guys, gents, thank you very much for this. Much appreciated. And we'll see you soon.
Thank
you so much.
Thank you.